So, BioStem Technologies just did something pretty interesting. They dropped two major pieces of news on the very same day, a big restatement of their past financials and their latest quarterly earnings. Now, an accounting change mixed with a performance update, that can get confusing pretty fast. So in this explainer, we're going to break down exactly what's going on.
You know, the word restatement can definitely make investors a little nervous, right? But when you see it paired with a report that shows solid performance, you gotta ask, what's the real story here? And that's exactly what we're here to do. Get to the bottom of what changed, what didn't change, and what it all means for the company's future. Okay, here's our game plan. We'll start with the big update itself, then we'll decode that financial restatement. After that, we'll dig into what really changed for the bottom line, cover their Q3 performance, and then we'll tie it all together with their plan to uplist to a major stock exchange.
All right, first up, let's tackle this financial restatement. It's really important to get this. This wasn't about them finding an error and scrambling to fix it. Nope. This was a deliberate, planned move to get their accounting in line with standard practices, all with an eye on their future growth. The whole thing really comes down to one accounting term, contra revenue. Now, I know, it sounds super technical, but the idea is actually simple. Just think of it like a coupon at the grocery store. The store doesn't ring you up for the full price and then list your coupon as a separate marketing expense, right? Of course not. They just record the final price you paid. That's pretty much all BioStem is doing here. So let's look at the before and after. In the old way of doing things, certain fees they paid their partner were buried down in the sales and marketing expense line. Now with the new method, those exact same fees are just subtracted right from the top, from gross revenue to get to a new number called net revenue. It's the same amount of money just moved from one part of the spreadsheet to another.
And look, this wasn't some random decision. Here's the CFO, Brandon Poe, explaining it himself. He calls it a comprehensive review to line up with US GAAP, which is basically the rule book for accounting. But the most important part of that quote? Ready to move forward. This was about cleaning house to get ready for their next big steps.
Okay, so that leads us to the million-dollar question. What did this actually do to the company's financial health? Did this whole accounting shuffle actually change how profitable they are?
This table right here tells the entire story. Just look at the numbers for 2024. Gross sales went down by $15 million. But then look at the very next line. Sales and marketing expense also went down by the exact same $15 million. The two changes just perfectly cancel each other out. And the result? Take a look at the bottom line. Net income, zero change, nothing.
So here's the absolute crucial takeaway. The key numbers that you use to measure the real health of the business were completely unaffected. Let's take EBITDA, which measures core profit, unchanged.
What about net income, the ultimate bottom line profit? That's right, also unchanged.
And maybe most importantly, cash flow, the actual cash the business is bringing in the door, was totally unaffected. This was truly just an accounting reclassification.
And this just perfectly hammers home the point from the CEO, Jason Matuszewski. He says it right there. The underlying strength of our business is unchanged. The business itself, how it operates, its margins, its ability to make money, is exactly the same today as it was before this change.
Okay, so with all that accounting stuff clear, let's pivot to the second big announcement from that day, how the company actually performed in the third quarter of 2025. This is where we see what's happening on the ground. And the performance was strong. In Q3, the company did $10.5 million in net revenue. From that, they produced an incredible $9.3 million in gross profit. I mean, do the math. That's a gross margin of nearly 89%, which is just fantastic. And it all led to a positive net income of $800,000 for the quarter. Solid.
But honestly, the story is way bigger than just the numbers. Operationally, Q3 was a huge quarter for them. They passed an FDA inspection with a perfect score, 0 observations. They published positive clinical trial data, and another one of their trials is enrolling ahead of schedule. They're moving into the VA market, they secured land for a brand new headquarters, and they appointed a top-tier firm, KPMG, as their auditor. This shows real momentum across the entire company. So this brings us to the final piece of the puzzle. Why do all of this right now? The restatement, the new auditor, the big operational push, it's all part of one clear strategy. It's about strengthening the company's foundations to get ready for a major league step-up. And they've laid out the roadmap pretty clearly. Step 1, restate the financials to meet the highest standards. Check, that's done. Step 2, get a full independent audit by a top firm like KPMG. Well, that's happening right now.
They expect that audit to be done by the end of the first quarter of 2026, which then paves the way for the final goal, uplisting to a major exchange like the Nasdaq.
So when you put it all together, the picture becomes really clear. What looked like a confusing double announcement was actually just two sides of the same coin. A company getting its financial house in perfect order, while at the same time executing like crazy on its business plan. They clarified the past to prepare for the future. Which really just leaves us with one final question. With its finances buttoned up and clear operational momentum, is BioStem ready for its next big chapter?